Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning, hello and welcome. You're with us. This is Bazaar Morning Call and we're coming to you as always live from the CNBC TV 18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me is Nigel D'Souza. Rima is with us this morning. And guys, I don't know how many of you were listening. It was a very spirited Trump address. It was things still ongoing by the time we came into the studio.
Indeed, and some very strong comments coming in on bringing down drug pricing, which will be effective. Now, the question is, will it impact Indian pharma, or he's specifically talking about the branded, patented drugs, which are expensive. And considering that Indian pharma is at least majority exports are the generic ones, maybe they're out of the ambit. But of course, right, like, you know, it's all guns blazing, all eyes on Washington and the Trump speech.
Well, that's right. We'll keep an eye out on what Trump has to say. It's difficult to keep him out of the action, but we have big central bank action as well that's due in the next 24 hours or so. So that's going to be top of mind, I think, from a global perspective.
It seems like Bank of Japan should be priced in, right? That's tomorrow.
That they'll be hiking.
They'll be hiking by 25 basis points.
What if they don't?
When the Santa Claus rally comes.
True.
Okay, let's talk about this. And this is exactly, some of the cues that the markets are reacting to this morning. First of all, the headline is negative. The headline is negative from Wall Street and bulk of Asia as well, also, trading with cuts. And that's because of the same AI headache. Now, what contributed or what triggered the headache yesterday? It was Oracle. So that's, the indices are on your screens. The slide was between 0.5% to almost 2% on the Nasdaq. What triggered it yesterday was Oracle. There was a report in the Financial Times that indicated that one of Oracle's key investors is now pulling out or backing out of funding one of their big data center projects in Michigan. It's a $10 billion project. And one key investor is pulling out. That was enough to get people worried about the AI spends, about the interconnectedness of a lot of these recent AI deals. And what was a result was a broad-based sell-off in tech. A lot of the other chip stocks, NVIDIA, something like AMD, Broadcom, all these stocks were down 3, 4, 5%. So that's pretty much, how the US market action played up. We have more data in focus today. There's the CPI number that will finally come out, the US CPI number for November after that prolonged shutdown. The expectation is that inflation at the consumer level in the US will show an increase of about 3.1% year on year. So that's something that the market is watching out for. And ahead of that data, yesterday we didn't have too much of action in the bond markets. Yields pretty much range bound. The 10-year around that 4.1% handle, US 10-year. The dollar managed to recover. The dollar had dropped quite a bit after the jobs report, but yesterday was a day of a big recovery. In fact, the dollar index, even as we speak, is holding on to a lot of those gains that it managed to plow back yesterday at that 98.50, just under 98.50, that handle. Now, where that leaves the rupee is anyone's guess, but at least we had some respite on the rupee front yesterday. But while the rupee gave us some sense of relief, the bad news this morning is coming in from crude oil. Crude oil prices overnight have moved up by about 1.5%. And what we're dealing with is this whole impact of the Venezuelan oil blockade that Mr. Trump has started. He is, blocking all oil tankers that are sanctioned. And some estimates here, market estimates, how much does Venezuela contribute? So they're daily giving to the market almost 750,000 barrels. And about half of these barrels are going to China. So there is some concern building up on how long this blockade is going to be and whether that, leads to any kind of a supply disruption or not. So oil is up. Now, for us, the Indian market has been locked in a very narrow 400, 450 point range. The downside of that range is about 28,700. And the upside is what's on your screen, 26,000 to 26,100. And there's no decisive breakout. So we continue playing in that range in all probability. A lot of capital market stocks are going to be in focus. So watch for brokers, watch for wealth managers, watch for AMC stocks, because that SEBI board meet finally happened. And they have done more or less what they had proposed. The TERs have been raging. The TER has been broken up. So the total expense ratio will include what is called the base expense ratio, then the brokerages, the brokerage fee that's being paid to brokers, and statutory levies as well as taxes. So that's how the breakup is. Most importantly for brokers, some relief that brokerage cap has not been brought down to 2 basis points, which was the big fear. It has been brought down to 6 basis points. So maybe at least for broker stocks, a sigh of relief. Nigel.
Well, that's right. Well, let's focus on, the F&O action, how trade is set up. In terms of institutional flows, well, yesterday was a positive number, both from the FIs as well as the DIIs. But the more interesting factors that are playing out are actually in the F&O market. And in yesterday's trade, as we've been seeing in the last few trading sessions, the FIs went ahead and they added some short positions. In yesterday's trade, we did see the short positioning getting added by close on 6,500 contracts on. And now, in percentage terms, it's at around 92%. So you'll ask, when was the last time we had a market that was net short close to 92%? I just rewound a little bit, went back to October. In October, I think on October 14th, we should get that data point up for you on the screen. The short positioning was around similar levels. That was the extreme. And then, in fact, the markets were holding at around this 25,000 odd mark. In the next 10 trading sessions, actually, the short positioning came down drastically, and we had the markets that bounced up a fair bit. This time around as well, the short positioning is at similar levels. 10 sessions later, let's see whether or not getting into the new year, the bulls have enough ammunition to fight back and cause these short positions actually to cover out. So that's going to be very important. One, the FI is aggressively net short. The second technical factor that you look at is the PCR. That's gradually moving to the lower end of the range. Currently, it's around 0.77. Recent low we saw was around 0.63 odd. So it has some distance to go. But both these two are getting into that oversold or, that aggressive level in terms of the short side. So that's going to be important. In terms of stocks that, the strikes that were in focus, 26,000 call, 25,900 call, both of them were fairly active because the call writers, now they believe they have the upper levels covered. Well, on the downside, this 25,800 put as well did see some addition with a premium in that vicinity of close to around 100 rupees. So just plugging in this, you see that around that 25,700 will be important. And on a day-to-day basis, that support level is actually moving lower. But this 25,700 level is important. I think that range of around 25,500 to around 25,700, that's important on the downside. Well, otherwise, you're looking at the 50 DMA, the 20 DMA. That's the technical levels that you're looking at. So, that's going to be important to defend that range on the downside. The Nifty Bank as well. Well, yesterday I did see some kind of weakness, but it's important that the recent low, the last week we went to this 58,500 odd mark, and we bounced a couple of times from there. So that's going to be important. 20 DMA becomes a bit of a resistance zone. The stock that we'll be looking at will be, Bandhan Bank. That one's still in the F&O ban, but it's giving you that, if you go by the data points, in all probability, it could possibly be out of the F&O ban either today or tomorrow. Remember, central bank action is going to be top of mind for the next 24 hours. Will the Bank of Japan go the distance and hike rates? Or, do they have a pleasant surprise from a bullish perspective? So central bank action is something that we'll be tracking. A couple of indicators indicate that maybe, at least in the near term, we could see some bit of a relief either today, tomorrow, or the next couple of trading sessions because the PCR has moved to the lower end and the short positioning at the upper end.
Thank you very much for that. If Bank of Japan does raise the interest rates, it will stand at 0.75%, which is the highest in 3 decades. So after an extraordinary period of easing to combat deflation for the last 1.5 years, they've been trying to normalize it. The normalization started in January of 2024. From negative, it came back to neutral or zero. And very slowly, they've been hiking it. It stands at 0.5%. The expectation from economists is that it will further increase by 25 basis points to 0.75%. But that seems to be what's expected. So maybe is priced in, but that's the trigger. But Nigel, finally an FI buy figure.
Yeah.
I think it's the first.
For how long?
The first one in the whole of December. You have to go back 26th of November. So
it's a Christmas present.
Christmas present. It's a one-off, or we're going to get this every day. But it's a good one.
Yeah, that's good.
It's a good one. But let's get to the equity calls then. Amish Shah of Bank of America says the consumer durable sector is now favorably positioned on both bottom-up and top-down factors. The sector is expected to see a normal summer in calendar year 2026 based on the early weather forecast. He says it is one of the few attractive pockets post the recent correction. He adds the risks are skewed to the upside. And in consumer durables, they prefer LG Electronics over Voltas and Havells India.